Hey everyone, welcome to an interview that I am excited to jump into with my good friend Joe Brown. You might recognize him from Heresy Financial on YouTube. He's a fast growing channel, one that's been getting a lot of attention, one that I've been enjoying. Joe, thanks for joining me today.
Yeah, absolutely. Thanks for having me, Mark. I'm really excited for the talk.
Yeah, I've been loving your content you've been doing on YouTube, and I know you and we've been having some fun conversations offline as well. And you hosted me on your channel as well, and that was a great conversation. I want to get into some of the things that we had talked about there, but before we do, I'm curious, and actually I don't even know. And why don't you just tell us kind of a little bit about your background and why you're talking about these topics, what you're doing?
Yeah, absolutely. Well, years ago when I got married, I was like $30,000 in debt, making minimum wage, knew nothing about money, and was really in a hole. And so started the whole, just investigating, seeing how I could get myself out of it, and did the debt snowball thing. And that's when kind of it hit me how much I enjoyed investing in economics and learning about how money works. And so the only thing I knew how to do at that point was I was like, well, I got to get a job doing this so I can learn more about it. So I became a stockbroker, and throughout that time, I started realizing there are big discrepancies between what the industry pushes and teaches and talks about, and then stuff that I was learning just self-educating myself about that, through basically reading books. I read a lot, and it got to a point where I realized, there's almost like an integrity thing. I can't continue to do what I'm doing and teach people how to, blindly dollar cost average into stocks and bonds, 60-40 portfolio, and just say, there's long term, this is great, and this is the only thing you need to just ignore how money works. This is the only thing you need to know. And so it kind of got to a breaking point, and that's when I kind of branched out and just started Heresy Financial, which it's a little bit of a weird word, but for anybody who doesn't have any religious background, but heresy, the definition is an opinion that is at odds with what is broadly accepted. And I know there are lots of people like you and me and George Gammon and Peter Schiff, and there's lots of opinions that are kind of preaching the truth. So I'm not, I don't think I'm, the only one or anything, but to the vast majority of people, to the mainstream media, to the financial industry, it's like, hey, no, don't pay attention to the man behind the curtain. So that's what I'm trying to do, just to educate so that if you know how money works, you can invest and protect your wealth better. And the more people that do that, the better off everybody is.
Yeah, no, that's so true. And I love that you have that perspective. I have that perspective, and not from working inside the belly of the beast like you have. But, my opinion, and you tell me if this is correct, but, and actually, I won't call her out specifically, but somebody in my family works for Charles Schwab as an advisor. And so we have these conversations at family gatherings. And, in my opinion, they're just like glorified sales reps. I mean, they're literally selling the products that their company has available to them. And she says that even if somebody were to ask them specifically, let's say even about Bitcoin, for example, they're not even allowed to talk about it.
Yeah. Yeah, no, that's 100% true. And the industry is moving more and more that direction, because it used to be you go to your stockbroker and say, hey, got any stock tips? And they'd sell you the stocks that they're selling. And so the effort in the industry to move away from the conflict of interest has gotten to a point where they're handcuffed, and good and bad comes from that. But basically, most financial advisors today will only be able to tell you, if you want the safest thing available, loan money to the government. If you want the most money-making thing possible, buy the S&P 500. And that's just, and that's basically what they're handcuffed in order to give advice about. And so anything else, hey, should I buy real estate? No, but if you buy our product, there's a little bit of exposure to the overall real estate industry through some REITs or ETFs. And so really handcuffed, and you don't have the ability to have conversations about how money works.
Right. Another thing that I'm not a big fan of what these financial advisors do is they'll use something like just stay in it for the long run. Right? It's not timing the market; it's time in the market. And I'm not a fan of timing the market either. But they use these long, drawn out things where, like, over the last 80 years, the market's done 6 or 8%, for example. And while that might be true, they're from 1970, there was a 25-year gap where it dipped and it took 25 years just to reclaim its previous high. And so while that approach is factually correct over an 80-year stretch, it did do that. If you were trying to retire in that 25-year gap, for example, it would have been disastrous.
Disastrous. And it's technically, while it might be technically true, there's a huge deceptive element to that. Because if I told somebody, hey, if you had invested in Bitcoin since 1923, you'd be a trillionaire right now. But right. You couldn't invest in Bitcoin in 1923. Right. And similarly, you couldn't have invested in the S&P 500 in 1940 or in 1950. You could buy individual stocks, but there was no mutual fund. There were no ETFs. And so the vehicles that are being used, pushed on customers today, and then the data that they're using to back up that push, you couldn't have done what they're telling you to do today back when that data is originally from. And so then there's survivorship bias and all those sort of things that are mixed in there. But essentially, there's a lot of deception and manipulation and clever sleight of hand that goes into pushing that data, where you're not going to get today what the data would suggest if you look back from 40, 50, 60, 70 years ago.
Hey, hold up just for a second. I want to tell you about something. I just got something cool in the mail I want to show you, and it is this new sleek package I just got with a brand new credit card. This isn't just any credit card. This is a BlockFi credit card that's powered by Visa, and it's backed by Bitcoin rewards. So this is a Visa card. I can use it anywhere in the world that Visa is accepted, and the benefit of this BlockFi Visa card is that I get paid back in Bitcoin. Most of my other cards pay me in some sort of reward points. I get airline miles. I'm not very good at using those. They end up accumulating and I don't do anything with them. But getting to earn Bitcoin back with every single purchase is, of course, something that matters to me. Now, I know for a lot of people, they say that the price of Bitcoin is too high. So I say, well, you can always earn Bitcoin. You can get paid in Bitcoin, or you can just get cash back rewards on every purchase paid in Bitcoin with the BlockFi Visa credit card, used everywhere that Visa is accepted. And if you want to sign up for the Visa card that pays back in Bitcoin from BlockFi, there is a link in the description down below. Check it out.
Yeah. Another thing is that I think it's pretty apparent to pretty much anybody that's alive at this point that wow, the world's changed in the last year. I say that the world we're going into is not the world that we've left behind. And so when they're using 80 years of history, well, does that mean that the next 80 are going to be exactly like the past 80? And I would say that absolutely not. Two big things I would say to that. One, 1971, we got off the gold standard, and really previous to 1971 or really the 80s, most people didn't invest in the stock market. So that's one. And then two, today more than ever, really since 2008, but today more than ever, it's all being driven by Fed policy. Mm-hmm. I mean, do you see those as being like reasons why maybe looking in the future is not as good as looking in the past?
100%. You follow anything back far enough, you're going to find that the root issue is the money. And the main investment the main thing people invested in used to be bonds.
Right.
Stocks were looked at as, too risky. It wasn't something that, anybody really retail touched. And as you have the monetary supply debased increasingly quickly over time, you necessarily push the capital of a nation from conservative to risky, because that's the only way to achieve growth greater than the rate at which you're losing purchasing power. And if the purchasing power of your money never changed, then all you would need to do is throw your money under a mattress. You wouldn't care, because it's going to keep its purchasing power and then slowly grow from technological progress. But following the money, you realize, okay, well, the faster they debase our money, the more money has to go into things that in the end actually destroy wealth. Right.
Yeah. And that's such a good point. And I think when you really dig down and understand, and what I like to take these like very complex subjects and then break them down almost to, whatever you'd call first principles. And I think to where they're easy to understand. When you understand them there, then you understand them on the more complex side. So kind of to the point that you just said, like progress happens when we can specialize. I can be the best at what I do. You be the best at you do. And I should be the best at that. And then I should be able to store my wealth. But because our wealth isn't being stored properly, to the point you just made, it's losing value so fast. It's forced us to become investors. And now I have to be half whatever brain surgeon and half investor. And if I'm only half of that, I'm not going to be very good, as opposed to just being able to do that. And then I think about, imagine all the productivity loss that we've suffered because people couldn't be the best brain surgeon or be the best rocket science. They've been forced to be half investor at the same time.
Yeah. Yeah, absolutely. There's so much to unpack there. Even from the standpoint of the creation of these very complex financial markets are a result of a global fiat standard. You don't have Forex markets if the world is on a sound money standard, if there's no ability for currency arbitrage or relative value trades. Most of Wall Street does not exist on a gold standard. And that's some of the smartest and hardest working people in the society, because that's where there's so much money that's really just a drain on the resources of everything that you could be pushing forward, from a technology standpoint or other things that actually produce value. And so there's that element to it, and the ability to store your labor in a money and be able to trust that allows you to focus on things that are productive just for everybody.
Right.
Yeah.
Yeah. And what's productive is by creating value. And so let's jump into one piece. So when I was on your channel, we were talking about value, or what gives things value. And I think maybe I was a little bit misunderstood, and you kind of went in and kind of made a correction on that, which I think we agreed on that, but maybe didn't come out right. But what does give those things the value? Some people say, well, it's the cost. And that's kind of what some people thought. It's the cost of production gives it the value. And that's almost like a Peter Schiff argument, which is like gold has intrinsic value, which I would say there is no such thing as intrinsic value. Right. I don't know if you agree with that. Yeah. So what does give it those things, those value?
Yeah, I think the best, when you talk about breaking it down to the easiest level to understand, the question that needs to be answered is, what does it take to acquire the money? And so if we have a money, let's just say gold, the only way to acquire gold is through labor or capital. That's the only way to acquire it. And that's me selling my time to somebody. That's me creating something that somebody else values. So to me, it doesn't have anything to do with intrinsic value. It's what does it take to acquire more of it? If you've got a pizza, the only way to get more pizza is to create more pizza. And that's how you get more slices of the pizza, is to actually make another pizza. Right. But if there is somebody, and mining counts too, because it takes labor, time, energy to actually create a more of a supply of the gold. So no matter how you look at it, it requires something.
It requires energy. It requires resources.
Yes.
Resources.
Yeah. Right. If there is somebody that has the ability, let's say a pizza cutter, to slice more slices of the pizza, and they don't need to create more pizza to get a slice for themselves. They can just take little slices off of everybody else's slice, little pieces so they don't notice. That's how that person is going to acquire their own pizza. And so the same way, if you have a money supply where one person has a monopoly on being able to create more units of that money without providing something of value, there's no labor required. There's no energy required. There's no capital required, resources, nothing. It's a button. Then to the extent that new money is created that way, the value of all other currency goes down. And the way you know that's true for sure is to give everybody that ability. Because the moment everybody has that ability is the exact same moment nobody accepts that currency anymore.
Right.
Because I'm not going to give you my labor if you're going to give me oxygen. Oxygen is abundant. It's infinite. It's free. I can get it without labor. So I won't give you my labor for your oxygen. But the moment you introduce scarcity and go underwater, well, now all of a sudden I will give you my labor, my time, my money, my stored wealth in exchange for oxygen to take it somewhere where it's scarce.
Yeah.
And so that's why scarcity matters. And scarcity only exists when something has an absolute limit where nobody can create more of it without labor, energy, resources, capital.
Right.
So that's the main.
That sets like the baseline, which allows and prevents people from counterfeiting more of it. And that's where I was saying that, gold is backed by energy, just like Bitcoin is backed by energy. And that's really the limitation that prevents people from counterfeiting or creating more of it. But then things carry monetary premiums above that cost level. And I think that's where that little bit of a disconnect was saying. I was talking about people couldn't counterfeit it because it had that base amount of value that was needed to acquire it or create it. But then things have a premium over it. So for example, I could make a leather bag for $5 and someone might sell it for 10. But if I put a Louis Vuitton stamp on it, my wife might pay $5,000 for it.
Right.
It didn't cost any more to create it, but it has a monetary premium placed on that. Right.
Right. Yeah. The value of the output is somewhat determined by the value of the inputs. But not completely. There are many other factors that influence that up and down. And so if it takes me a week to build something that it takes you half a week to build, we can sell them for the same price, but we had drastically different inputs to create the same value. Yeah. And so having a hard cap or a supply of money that requires energy, resources, labor, capital in order to produce more of, that is necessary for the money to be considered good, but it's not sufficient because there's lots of things in life that have that qualification that don't serve as money well. Yeah.
So I want to take that now that we've kind of established that building block of money, and you actually had put a good point on it, which is the ability to print more money, and that brings me back to like this central planning, where one entity, a government, is able to plan or be able to produce more of that. I've said that whenever one group of people are forced to trade their time for money, and another group of people have a money printer, it leads to slavery every time. But so if we have this central planner, now before you and I started recording, we were going on a rant. I was frustrated about some things I'm dealing with in Puerto Rico, being without electricity. And we were talking about how actually we're having energy crises all over the world. And at the time of this recording, if you literally go Google natural gas shortages or gasoline shortages or electricity outages, you'll know exactly what we're talking about. I'm in Puerto Rico. I'm working out of an office here because my house has been out of electricity for days now. And how these shortages are manufactured crises because of central planning, not because we don't have enough of the energy.
Yeah. No, that's a great example. So for the kind of the base reason for it is decentralized decision making versus centralized decision making, and that really comes down to the pricing mechanism. So this year, if half the wheat is produced that was produced last year, then the world will absolutely consume half the wheat that it did last year. It must consume less wheat. And the way that works out in practice is that the price of wheat goes up enough to the point to discourage the consumption of some, maybe not all, but at least some, to the point where half the wheat is consumed. And so maybe for the person who buys a loaf of bread a month, they still get the same amount of wheat. But maybe for the bakery that has 100 loaves a day, maybe they have to cut back and do things a little bit differently because they just can't afford the higher cost. And so that is the decentralized decision-making system of prices, where prices are a worldwide auction that determines the equilibrium between supply and demand. And the decision-making that goes into that is all of the subjective needs and wants of 8 billion people.
Right.
And there is no quantum computer powered AI in the future powerful enough to replace that. It's simply there is nothing that can replace that, and especially when you look at today, where that is trying to be replaced by 10, 20, 50 people sitting in a room with old data.
Right.
And so the only result of that is that you have a misallocation of resources when you don't let the system make allocation decisions for itself on a decentralized basis. The result of that is some areas get too much money and some areas get not enough money. And the pricing information that's being sent is distorted, causing a destruction of wealth. So that's the base. Now we look at energy. Same thing is happening with energy. You have an agenda, which make your opinion about whether it's good or bad doesn't matter here. There's an agenda about what type of energy should be used or should not be used. So you get a country like Germany that shuts down their nuclear power plants, which are clean, by the way. Nuclear energy is clean. Cleaner than solar and wind. And then you replace that with solar and wind. And then suddenly that has problems that were unanticipated. And you've now imposed systemic risk that causes you as a country to now use more coal than you used to. And coal is the worst form in terms of environmentally friendly. And so that's what happens when you try and replace in a complex system, the decentralized bottom layer of decision making with a centralized top down decision maker.
Yeah, because they're just never going to have enough information. I was almost getting a little chuckle because I'm from Southern California, and in Southern California, they're trying to lead the nation in this new policy of going green. I guess you'll call it that, which it's not really green, but the goal is to shut down all the fossil fuel, apparently, and move to renewable. And so they're very aggressive on that. So they've shut down several of their natural gas electricity plants. They've shut down 2 out of the 3 nuclear power plants. But the renewables haven't given them enough electricity back. Well, Governor Newsom thought, well, he could game the system by just buying electricity from neighboring states whenever they needed it. But guess what? When California needs it, they need it too, and they don't have it available. And so guess what happens? We have blackouts, not because we don't know how enough make enough electricity, but because of his policy. And what was hilarious to me, because I'm not in the state right now, is that he was facing a recall a few weeks ago, and he was afraid the lights were going to go out during a recall. So they literally had to suspend the climate orders or whatever, and he created another emergency, and he put in gas diesel generators at the plants to create enough electricity so they didn't go out.
Oh, wow.
So you shut down the clean nuclear and the clean natural gas, and now you're running standby diesel generators. I mean, it's a clown show. And I think it just goes to show that all these emergencies, they're man-made. They're like created emergencies that didn't have to happen.
Yeah. And that's comical. I didn't realize that he had to use those, put up those generators. And it just, the thing about energy is it really is very important. And when you look back at history, every time humanity has found a more abundant source of energy, we've experienced a giant leap forward in terms of progress and wealth. That was true when we discovered fire and we started being able to cook our food and get way more nutrients out of it. Now suddenly we've outsourced a bunch of our labor to fire because we don't have to forage for food as much. Right. And so now we can use that time and energy for other more productive things. Same thing when we started offloading our labor to animals for farming, when we got the invention of the tractor, and hundreds of people are now replaced by one tractor. These are not bad things. These are good things. And every time you see a new form of energy come in, like when we moved from burning biomass, burning wood, to coal, there was a massive leap forward, and we stopped burning down forests.
Right.
That's good for the environment. New forms of energy that are more abundant, they coincide with environmental friendliness. And when we discovered fossil fuel, we stopped so much needing to rely on coal. That's a good thing, better for our environment. And so the next leap forward in terms of wealth and progress and abundance and energy, it has to come with equally exponential form of energy, and the energy density that you get from some of these, renewable forms like solar and wind are just not there. And that's why I'm a big proponent of nuclear, and the world will catch up someday. But it's a good thing. We need more energy. We don't need less energy. It'll be better for the planet and better for wealth for everybody.
I got a kick out of, again, trying to find some comic relief here in Puerto Rico. So the power was out so long on my side of the island, 90, 95 degree temperatures. People don't have air conditioners, don't have fans. Their food's going bad. And the power was out so long that the water pumps went out because they need electricity too. So look if that focus, come on. There. So they set up a gas diesel generator at the water pump. So they set up a gas diesel generator. And now AOC was over a few months ago in having a hearing here in Puerto Rico. And she said she was arguing that they should shut down one of our largest sources of energy on the island that produces 20% of the electricity on the island. And we should shut it down, she said. And she said that she talked to the experts, and they said that if we shut down 20% of electricity production, it will have no adverse effects on the price or the amount of energy that we have. Okay, how does that work?
Yeah.
And so it really goes to show that, I guess when you let politicians run energy as opposed to energy. In Venezuela is one of the richest countries in the world. They have more oil than Saudi Arabia. But when they went really socialist, they replaced all the oil executives with the brother-in-laws and the politicians, and they didn't know how to get oil out of the ground. And today, Venezuela can't even get oil out of the ground. And it just kind of goes back to these central planners thinking they know better than the specialists, right? Having that specialty, that decentralized information. And man, I just hope more people wake up and realize it's all man-made.
Yeah. Yeah. Well, that's a big point about it is replacing, like you said, replacing the people who are closest and incentivized to make the best decisions, because ultimately what you're doing then as making a top-down centralized decision is you are taking resources away from anybody who is effective at producing wealth. Right. And you are giving those resources to the areas or the industries or the people who are by definition not as effective at producing wealth. And so the solar thing is a fantastic example because there are a lot of companies for a long time, and some of them have failed, but they've been given lots of subsidies. So everybody's praising the fact that things like solar have gotten a lot cheaper. But the only reason that's the case is because there's been a top-down decision to take resources away from those who are more effective at creating jobs and wealth for people and giving that to those who would not be able to survive without it. Therefore, they are wealth destroyers. Right. Or at the very least, less effective at it. And with the proper price mechanisms, it's not like people are dumb, and it's not like the CEOs of giant companies are looking for ways to spend more money. If they can figure out a way to get free electricity, they're going to do it. Energy is a big cost for everybody in the world. And so there is already a built-in market incentive to find the cleanest, most renewable, most abundant source of energy. But when you step in and say, no, I think I know better, then you're going to have, at the very least, a misallocation of resources, but at the worst, destruction of a lot of capital.
Yeah, and it's really that incentive structure. I love Milton Friedman. He did a lot of work talking about how companies should chase profit, and to a lot of people that sounds wrong. It's greedy. What do you mean we should all be focused on profits? But profits are, because that price is the signal, is the way. So for example, well, no, companies should be more altruistic. They should be, more socially conscious. Okay, well, guess what? If the market wants that, then, and I'm chasing profits, then I would build a business that would give them that. So for example, you drive by your local high school and you see all the businesses sponsoring the local high school. Why do they do that? Well, they sponsor a local high school, so they hope that the people that go there will bring business back to them, and they do that for profit. And so back to, the Puerto Rico example, a lot of people on a that I put up has said, oh, the government needs to take it over. They can do better. But imagine if there was two electricity companies and they were competing against each other. They would each be trying to give me, the consumer, a better product at a better price. And guess what? If my power was down for a couple hours, I would go to the other company.
Yeah.
And it would never happen ever. But when there's only one and it's the government, then that's what you get.
Imagine you're using Netflix and half of the shows that you try and click on don't work. It just says, sorry, out of commission, and it won't work for an unknown amount of time. That's what happens with anything that is run by a government. That the reason for that is not because governments are inherently bad. It's because the incentive structure is not aligned. If you don't do your job and fulfill your purpose in a government position, if you don't fix the problem, you can blame it on not having enough resources and you get a bigger budget. So the incentive structure is to not fix things and to make problems last as long as possible. And that's why you have endless wars on everything from an opaque definition of terrorism to war on poverty and war on drugs and things that are endless that require more and more funding, because the incentive structure is designed that way versus, like you said, you and I, if I want to sell you a cheeseburger, I have to be at a cheaper price or better quality than any other potential person who's going to sell you a cheeseburger, and not just existing competition. This is where free markets prevent monopolies, because the threat of competition is just as effective at introducing or pushing innovation. Because if I just sit by and don't make my product cheaper or higher quality, then the threat somebody else comes along and displaces me is always there, unless I can get a legal monopoly and have the government, use their force in order to make me not have to innovate anymore.
Yeah. When cell phones first came out, they were like big old bricks, and it was like only the rich people that had them. And today you can get like an unlimited plan for like $30 because there's competition. And yeah, if my phone service with T-Mobile went out, I'd go to AT&T or Verizon or whatever it was. I want to keep on this thread of these government created crises. I was showing you this picture before we went live, if I can get my camera to focus on this. And this is a picture right here of all the ships that are trying to come into port to deliver their goods and services. So all these green dots out there are literally ships trying to come in. And of course, we have product shortages on everything. Like we can't get anything. And why? Why can't we get them? Well, they're all sitting out here. Why are they sitting out there? Well, policies are preventing those ships from being unloaded, whether that be, COVID restrictions, or we're paying people not to work, so there's not enough people on the ports. But it's all of this man-made crisis that's creating these shortages. And then it's, think about this, like all these businesses are missing out on revenue because they can't sell products. You and I are missing out on things because we can't get them. It just makes me so mad.
I just wanted to take a second to explain to you one more time just how cool having this new BlockFi Visa credit card is. I've started to move a lot of my bills over to get paid from this. Of course, all my business supplies, I'm starting to pay for this, my advertising budgets, and I'm starting to run as much as I can through it because I'm getting paid a percentage back of every single transaction in Bitcoin. We want to save in Bitcoin because Bitcoin is an asset that goes up in value because of the deflationary nature of it. And we want to spend our fiat. So I'm spending my fiat through my BlockFi Visa card, and I'm getting back Bitcoin that I can save and I can hold. I expect it to go up in value a lot. I expect to hold my Bitcoin. I'm going to pass it to my kids and my grandkids, and hopefully my great grandkids will have my Bitcoin one day. So I'm going to save it. I'm going to spend my fiat through this card, and I'm going to earn back Bitcoin that I'm going to save. If you want to get one, there's a link down below.
Yeah. And it's very distracting for the average person because they look at things like this and there's a surface level, thing that's going on that's really a symptom. And that's what you follow it back enough, and it goes back to the money. And when you borrow purchasing power from the future, at some point that gets paid back. It's not an if, but a when. And when that happens, it might look like all sorts of other things are happening. But, I've got a good friend who's been in Lebanon for a couple of years, and just talking about the massive hyperinflation that's going on there right now. It's now the number one in the world for hyperinflation. They passed up Venezuela, and the easy answer is to look at the corrupt government officials and the battles between people who are trying to take over the government. But all of that is a symptom of having bad money. And so these things crop up and distract you from the root issue.
Yeah. Yeah. And the thing that I really want to bring people's attention to is whether it's the natural gas shortages that are happening throughout Europe. And they're saying that this year people could freeze to death because they won't have natural gas to heat their homes. The gasoline shortages that are causing more shortages where people can't deliver their goods to the restaurants. Electricity outages that we're having here, or whether it's all the boats that are stuck out by port. This is the Great Reset. Mm-hmm. By 2030, their stated goal is you'll own nothing and be happy. And a lot of people are like, well, how do we get from here to there?
Yeah.
Well, we just create a bunch of crises. We literally shut down the energy. We stop the flow, the pipelines that carry the oil. We make it where they can't even produce energy anymore. We make it where they can't offload their ships anymore. And I want people to get angry like I am, but more importantly, I want them to know where to target that source of anger. It's not a problem of free markets. It's because of central planners that are planning this.
And the other thing about that is that it's a lot of people have a hard time believing that, because you want to believe they have the best intentions at heart. You want to believe that your elected officials they have your back, and it's difficult to make the jump to that there's malice involved, that there's evil intent. But my opinion is it doesn't matter whether it's incompetence or malevolence, because all we're looking at is the results. Mm-hmm. So I don't care if it's incompetence. Right. I don't care if it's malice. Look at the results. That's all we care about, it either way. And so that's the main point. And the reason why they're able to do that is because they have unlimited funding. And they have unlimited funding because every dollar they spend has purchasing power that's taken as a small percent from your purchasing power. And so that's the only reason any of these things are able to happen, because they can't run out of purchasing power until they've exhausted literally all the resources. And that's the collapse that you see when things collapse under their own weight, when they've exhausted everybody's resources by force.
Yeah. And because they have that unlimited money printer, there's no feedback loop because there's no accountability. So typically, if you or I were making those bad decisions in our business or our household or whatever, we end up bankrupt or broke or kicked out on the streets or whatever it may be. Yeah. But they don't have any accountability. We can see that, Afghanistan is a perfect example, right? $2.5 trillion down the tubes, lots of people dead. We equipped the Taliban to be in the top 15% armed nations in the world now. Nobody got in trouble. No accountability. All these policies that go into effect, no accountability, and they'll just print up more money. So if that's the case, then what's the solution for that?
Yeah, I mean, that's always a question. And there's like two ways that people normally look at it. And normally people are looking at what's the solution for the system. And I think systems have such momentum that I don't think it's possible for one person who's got their head on straight, even if they become president, even if they become the chair of the Federal Reserve, no matter what the position is, systems that are large enough and complex enough have enough momentum to overrule something that comes and tries to stand in its way. And so, and to me, that's not even really the biggest point, because no matter what everybody else is doing, there's always individual choice, and you can step out of the way of the train. And many people think it's patriotic to try and stop the train, or many people think it's patriotic to get on the train, whether it crashes or not. But there's a third option, which is just get off the tracks, right? And just let it go, and don't be a part of it yourself.
Yeah. Well, I'm going to shamelessly plug. I am having a live event coming up in November, and it is going to be the theme of how to survive, how to navigate the Great Reset agenda. About 15 of the top speakers that are looking at what's going to happen over the next couple of years, and more importantly, what to do about that. Joe's going to be out there. I'm going to be out there. Come out, hang out with us, have a drink. We'd love to meet you. You're going to need that information because, as Joe's saying, you don't have to stand on the train tracks. You can decide to sidestep that thing. I want to pull this up on the screen. I don't typically do this, but I'm sure you're familiar with Hayek and this quote right here. And so we're talking about the problem being with the money. And he said this, I think he said this in the 80s, that we can't have a good money again before we take the thing out of the hands of the government. But to your point, no leader can ever do that. But that is, we can't take it violently out of their hands. So no one's ever going to be able to do that by force. No one's ever going to do that by policy. It can't be done because they won't give it up. So he says, all we can do is by some sly roundabout way, introduce something that they can't stop. Because like to the point you just made, Joe, no leader, no one's ever going to be able to do it. They won't give it up. And so all we can do is some sly roundabout way. And so he said that in the 80s, but of course, I'm a big fan of Bitcoin, and it almost seems prophetic that he said that in the 80s. And then we look at this today and go, Bitcoin was created and nobody knew about it for a couple of years. And then people knew about it, but it was some weird little internet money. And it's kind of like that Gandhi thing where first they ignore you and then they laugh at you. And then they try to fight you. And now they join you. And now we saw El Salvador announce it as a legal tender. I believe it was yesterday or day before. Jerome Powell was asked point blank, will the U.S. government ban it? He said no. And so we're seeing that, and it almost seems like it was this sly roundabout way. And now it's gotten so big, the governments can't ban it. So what are your thoughts on that?
Yeah, 100%.
I don't know. I'm going to say, I don't know exactly where you lie on this whole Bitcoin thing. So.
Yeah, it's I'm probably more in the middle than most, because it seems it's a very polarizing topic. You're either completely for it or completely against it. I'm probably more in the middle, but the more you learn about it, you realize that technology is developed in a way that you might be effective at stopping people from using it in your own country, within your own borders. But as soon as that happens, the incentive for it to exist somewhere else increases. And so the more you see it banned, the more everybody else who hasn't taken a position will look at that and say, well, we're probably not going to ban it then. So in the US, you're likely going, if I had to guess, the most tyrannical approach we'd see in the US to Bitcoin would be to outlaw it except through the use of an ETF, because then they can control the on and off ramps very easily, just like they do with stocks. And so to me, that would be the most tyrannical approach that I would expect to see in the US. But at the same time, this is why I also really, really love the idea of diversifying, not in the S&P 500, because you're not diversified. With the correlation is 100%. That's not diversified. They all move up and down together. We saw just the other day, everything crash, bonds and stocks together. So there's no diversification there. But when you have uncorrelated bets, you have true diversification. And so a lot of people say, okay, well, Bitcoin's going to take over gold, or Bitcoin's going to go to zero and gold is going to take over again, just like it has for a couple thousand years. But if Bitcoin really does start succeeding, more and more countries start adopting it as legal tender. You have China backtrack on their ban, whatever happens, you really start to see it take off. It's a couple 100,000, a million, whatever. You are going to, without a doubt, see that any legacy countries that are left, their only option will be to use gold to fight Bitcoin, because that's all they have. Central banks all around the world, nobody has Bitcoin yet. And many of them will hold gold until it's too late if Bitcoin gets to that point where it's completely taking over. So they're going to push gold. They're going to have to back their currencies up by gold. They're going to have to devalue their currencies to match the amount of gold that they actually have in storage. And the money supply compared to the amount of gold in central bank vaults, you'd see in today's terms, minimum 10, probably closer to $20,000 gold in today's money in order to combat another sound money system. And so that's why, even if Bitcoin does become the next money very soon and goes to $1 million. That is going to at least temporarily have a huge tailwind to gold. And hard assets, they help each other. To me, it's not a competition from a portfolio diversification standpoint. Mm-hmm. They both have a place.
Yeah, I think I became a gold bug in 2008 after the global financial crash, and really started learning about the financial system. What I figured after years is that I'm a sound money advocate. And I think I don't like to see the infighting between gold and Bitcoin. I think we're both fighting the same fight on that perspective. So I'll go with that. I made a video kind of to the point you were talking about just now about countries trying to hang on to their gold. I made a video a couple months ago, and it was when China kicked all the Bitcoin miners out of the country. Mm-hmm. And I called it China's second fatal mistake. And the reason why I call it that is because when the whole world was going to a gold standard, China tried to stay on the silver standard. And they thought, nope, we're going to stick with silver. Everyone else was going to gold. Well, gold was a better money. And China ended up losing. And they actually lost their place in the world as a superpower because of that. In about the early 1900s, 1920s, 30s, they finally capitulated and decided, okay, we got to get on the gold standard with the rest of the world. And they did. And so for the last 100 years, they've been trying to get their place back, and they have become the largest acquirer of gold in the world. Mm-hmm. They allow anyone to come mine gold, but all the gold mined in China has to be sold back to the country. They're the largest importer of gold. Reports, speculation show they could hold over 30,000 tons of gold, which is massive. Mm-hmm. But the second fatal mistake was that they had over 50% of all Bitcoin mining done in the country. Now, just like with the gold mining, they could have said, sure, mine all you want in China, but you have to sell it back to us, just like they do with gold. But they didn't. Instead, they chose to kick it all out of the country. Why? Because while the world may be, speculation at this point, may be going over to a Bitcoin standard, they're trying to hang on to a gold standard, just like they tried to hang on to the silver standard before. I called it the second fatal mistake. Obviously, time will tell, but it's an interesting history lesson, and time will tell. It's interesting.
Yeah, 100%. It's at the very least, like you said, sound money is. That sound money is the key, and whatever form that takes, it's going to produce prosperity. And I think more than likely, in the collapse of centralization, at least for a short period of time, you're going to see competing systems pop up. And who knows what'll win in the end? Anybody can make their best guess. But whether it's money or whether it's countries or whether it's governmental systems or whatever it is, you're likely to see things become more fractured and more decentralized, and different attempts and different ways to different strategies instead of just switching over to one.
Yeah. One thing that's really interesting, and this is when you really want to start digging into Bitcoin, this is pretty interesting, is that you change Charlie Munger, Warren Buffett's partner, says, show me the incentives, I show you the outcome. Mm-hmm. And so when you can change incentive structures, things change, the outcomes change. And so Bitcoin changes incentive structures. And there's a few we could dig into. I don't want to dive into too many rabbit holes, but just this week we saw the president of El Salvador, who obviously made Bitcoin legal tender. El Salvador is a very poor country. I think they're ranked 107 in GDP, so they're pretty far down there. I've been down there a few times. It's very poor. They don't have any natural resources. And in a lot of countries, most countries, wealth would come from the natural resources, whether that's gold, oil, et cetera. They don't really have any natural resources. But what they do have is they have a volcano. Mm-hmm. Okay, whatever. What good is that? Well, a volcano has heat, and they can turn heat into energy. Okay, so what? Right? So what? A lot of places have volcanoes, a lot of places have energy, a lot of places have rivers, because it's stranded energy. But now they're using that energy to turn into Bitcoin. Mm-hmm. So energy cannot be created or destroyed, right? It can only be transferred. So they're transferring it into Bitcoin. That Bitcoin can then be transferred to other parts of the world. Mm-hmm. And what's interesting is a country like El Salvador, who has no natural resources, all of a sudden has some serious natural resources. But think about this even a little bit bigger. So if a nation's wealth really comes from natural resources, what about a little island like Tonga in the South Pacific? What do they have? Coconuts? Oh, they got a volcano too. Mm-hmm. Well, what good does energy do in Tonga? Well, not any good unless they can mine Bitcoin with it. And it could really redistribute like the resources around the world. So that's definitely something to be keeping an eye on. It's going to be fun to see how that plays out.
Yeah, well, there's two big takeaways for me that stand out in that example. Number one is the results of freedom. So you take a look at Singapore, which used to be a state in Malaysia, and the king there 60 years ago, I think he went to Malaysia and he said, "Look, I've got a plan. We're going to become the richest nation in the world. Let's do this as one united Malaysia." And they said, "No, if you do this, we're going to kick you out." And he said it was the hardest day of his life, but he seceded from Malaysia, created Singapore, zero natural resources. They don't even have a volcano, but he instituted freedom, massive free market. And a lot of people look at that and say, okay, it's the wealthiest authoritarian nation on earth. And there are definitely some totalitarian aspects of it. But when you measure every economic indicator across the freedom scale, they're the most free nation on earth, economically speaking. And now they are tied or number one in millionaires per capita, wealth per capita.
Amazing story.
It's just absolutely incredible growth of wealth with zero natural resources. So that's the results of freedom, and instituting a money that the government cannot control is the foundation of freedom. And so back to El Salvador, when you talk about what they're doing with the volcano, the number one response to that move was, if they can access this energy, why wouldn't they just give free energy to their entire country? That's stupid to mine Bitcoin.
You can't transport it.
You can't transport it. And what is the cost of building the infrastructure to transport that energy into electricity for the entire nation? It's massive. The payoff for that is decades away. But you can start mining Bitcoin with that today, and that becomes profitable today, that you can then use those profits for other projects like utilities infrastructure later on. And so they airdropped Bitcoin to everybody. Yeah. So it's distributing that wealth to everybody. And so it
like in Saudi Arabia, for example, right? Saudi Arabia uses the oil to pay for most of the social things in Saudi Arabia. And so they can use it to pay for infrastructure, build out, airdrop it to the people, et cetera. And they can literally airdrop it. So anybody who has a Bitcoin wallet could just bing, and they had $30 in their wallet. So it could be done like that. I love that Singapore example. One thing, to your point, I mean, they are a little more authoritarian today, but if you go back to the origin, they basically said, we're going to have no laws. Like they literally did start free. Like we're literally going to have like no right, don't kill anybody and anything else you can do. And what's crazy is typically everyone supposedly these days is follow the science, right? Whatever that means, follow the science. Well, science, first of all, isn't fact. Science is the observation and hypothesis or opinion of what transpired. And so if we're really going to follow the science, then what we should do is we should look at events and then try to draw opinions from that. And so if we would look at Singapore and go, wow, that was a massive success. What did they do? Wow, look at the United States. What did they do? Oh, let's look at North or South Korea. What are the differences? It's like so obvious that America was great because of the freedom, or Singapore was great because of the freedom. North and South Korea is a perfect example of a free society and a totalitarian one. Why are people following the science here?
Yeah, exactly. Yeah, it's very clear when you study history and to more than just 20 years ago in your own country. It's very clear when you study history broadly, geographically, that the more free a society is, the more innovation and progress and wealth you have. And it happens without coercion. When you let people just do what they want to do, good things happen.
Yeah. With that, I think that's probably a good place to break. We've gone a long time, but it was a fun conversation. Hopefully everybody got some good stuff out of this. The main takeaways are most of these crises that we're facing today are man-made. They're man-made either because of bad intentions or naivety, whatever you want to call it. But ultimately, it comes down to central planning. So hopefully that's a good takeaway from everybody. Joe, I know I've been following your channel. Why don't you just give a shout out to everybody where they should keep up with you?
Yeah. The YouTube channel is Heresy Financial. And then that's where I'm most active. And then I'm also pretty active on Twitter, again, at Heresy Financial. So those are the two places that you'll find everything I'm doing.
Yeah. So I'll make sure we'll link that down below, and come hang out with us. Have a drink in Miami. Yeah. It's going to be fun. We'll be there in November, in about a month and a half from now. We'll put a link to that down below as well. And with that, we're going to sign it off.
All right. So much. Thank you.